Have you ever wondered why some people turn small money into life-changing wealth? What if $500 could quietly become $5,000 over time? Most people ignore small amounts, believing they are too insignificant to matter. But what if that belief is the very thing holding you back? Imagine holding $500 and feeling it's barely worth investing seriously. Now imagine someone else seeing that same amount as a powerful opportunity. The difference is not money, it is mindset and strategy combined intelligently. Let me tell you about someone who started exactly where you are today. He wasn't rich, connected, or particularly experienced in financial markets or investing. All he had was curiosity, patience, and a willingness to learn consistently. He didn't gamble his money, and he didn't chase overnight success stories. Instead, he focused on understanding how money actually grows over time. At first, progress was slow, almost painfully slow and discouraging to observe. But something interesting began happening after he stayed consistent for several months. His small wins started stacking up into something much more meaningful and visible. Each decision became sharper, more calculated, and increasingly confident with time. He stopped reacting emotionally and started thinking like a disciplined investor. That's when his $500 began behaving very differently than before. It wasn't just money anymore. It became a tool working quietly for him. Most people never reach this stage because they quit too early or panic. They expect fast results, but investing rewards patience, discipline, and long-term thinking. So the real question is not whether 500 can become 5,000. The real question is whether you are willing to think differently about money. Are you ready to treat small amounts with the same respect as large ones? Because that single shift can completely change your financial trajectory over time. Think about how many times you spent money without thinking twice about it. Now imagine redirecting even a fraction of that into intentional investments regularly. That's where transformation begins, not with huge capital, but consistent smart actions. Many successful investors actually started with far less than $500. What separated them was not luck, but their approach and long-term perspective. They understood something most people overlook about how wealth actually compounds. Wealth is rarely built in dramatic leaps, but through small, repeated decisions. Each choice either moves you closer to growth or further into stagnation, and most people unknowingly choose stagnation through fear or lack of knowledge. But today you're choosing something different simply by being here right now. You're choosing to understand, to learn, and to explore real possibilities. That alone already puts you ahead of a majority of people, because awareness is always the first step toward meaningful financial change. Now imagine yourself 1 year from today looking back at this moment. Would you regret not starting when you had the chance right now? Or would you feel proud for taking that first intentional step forward? The answer depends entirely on what you decide after listening to this, because knowledge without action rarely creates any real transformation in life. And investing is not about knowing everything, but starting with what you know. So let's explore how you can actually make this journey practical and realistic. No hype, no unrealistic promises, just strategies that actually make sense long-term. Because turning 500 into 5,000 is absolutely possible with discipline, but it requires clarity, patience, and a willingness to embrace calculated risks. Not reckless risks, but informed decisions that align with your financial goals. You don't need to be perfect, you just need to be consistent. And consistency is something completely within your control starting today. So stay with me, because what comes next will change your perspective. We're about to break down how this transformation actually begins step by step. And by the end, you'll see $500 very differently than before, because it's not small, it's simply the beginning of something much bigger. And that beginning starts right now with your decision to pay attention. Let's move forward and turn curiosity into something powerful and practical. Now that you see the potential, let's break down how this actually works. Turning 500 into 5,000 is not magic, it's structured execution. You need a plan that balances growth, risk, and consistency over time. Most beginners fail because they jump in without any clear direction. They chase trends, follow hype, and panic when things don't go perfectly. But smart investing starts with one simple principle: protect your initial capital. Because if you lose your foundation, growth becomes significantly harder to achieve. So the first step is dividing your money into intentional strategic portions. Never put your entire 500 into one single investment immediately. Instead, think of your money as a team working in different roles. Some portions should aim for steady growth with lower risk exposure. Others can be allocated toward higher growth opportunities with calculated risks. This balance is what allows both protection and potential expansion simultaneously. Let's imagine you split your 500 into three simple categories. One part goes into stable investments that grow slowly but consistently. Another part goes into moderate opportunities with balanced risk and reward potential. The final portion is for higher risk, higher reward plays with careful monitoring. This approach reduces emotional stress because not everything depends on one decision. Now let's talk about where these categories could actually be applied. Stable investments often include diversified funds or well-established companies. These don't explode overnight, but they build reliable long-term momentum. Moderate investments might include growing sectors or emerging strong businesses. These have more movement and can accelerate your returns with proper timing. High-risk investments include volatile assets that can swing dramatically in value. This is where discipline matters most because emotions can easily take over. The goal is not to gamble, but to take informed and limited risks. You are not trying to get rich overnight, you are building momentum. And momentum is what eventually leads to exponential-looking growth over time. Another critical element is consistency, not just initial investment decisions. Many people invest once and then completely forget or ignore their portfolio. But successful investors regularly review and adjust their positions strategically. They learn from mistakes instead of reacting emotionally to short-term fluctuations. Think of investing like planting seeds rather than buying lottery tickets. Some seeds grow quickly while others take time to fully develop, but all require patience, attention, and the right environment to succeed. This is where education becomes one of your strongest financial advantages. The more you understand markets, the better your decisions become gradually. You don't need to know everything, just focus on learning consistently. Even 30 minutes a day can dramatically improve your investing mindset. Another powerful habit is reinvesting any returns instead of spending them. This is how compounding begins working quietly behind the scenes. Small gains, when reinvested, start generating their own additional gains. Over time, this creates a snowball effect that accelerates your growth. Many people interrupt this process by withdrawing profits too early. Patience is what separates those who grow wealth from those who stall. Now let's talk about one thing that destroys most beginner investors. That one thing is emotional decision-making driven by fear and greed. When prices drop, fear pushes people to sell at the worst moment. When prices rise, greed pushes them to buy without proper analysis. Both behaviors lead to inconsistent and often disappointing financial results. Discipline means sticking to your strategy even when emotions get loud. It means trusting your plan instead of reacting to every market movement. And yes, there will be moments where doubt tries to creep in. That's completely normal and part of the investing learning process. The key is not eliminating doubt, but learning to act despite it, because every experienced investor once stood exactly where you are now, confused, uncertain, but willing to take the first calculated step forward. And that step is what transforms knowledge into real financial progress. CZ. So now that you understand the structure, something interesting is about to unfold. Here's the twist that most people never see coming in their journey. Turning 500 into 5,000 is actually not the hardest part. The hardest part is becoming the type of person who can achieve it. Because money growth is always a reflection of mindset and behavior patterns. Most people focus entirely on strategies while ignoring their internal decision process, but your habits will always overpower any strategy you try to follow. Let me explain this with something that might completely shift your perspective today. Imagine two people starting with the same $500 investment plan. They both follow identical strategies and have access to the same information, but after 6 months, their results look completely different from each other. One grows steadily while the other struggles or even loses money. What caused the difference if their strategies were exactly the same? The answer lies in their reactions during moments of uncertainty and pressure. One remained calm, patient, and disciplined during market fluctuations and uncertainty. The other reacted emotionally, making impulsive decisions based on fear or excitement. This is where most investing journeys quietly break down without people realizing. It's not about what you know, but how you behave under pressure. That's the hidden layer of investing that nobody talks about enough. Your psychology determines whether your plan actually works in real situations, because markets are unpredictable, but your behavior can be trained and controlled, and that gives you more power than trying to predict every movement. Let's go deeper into something even more surprising and counterintuitive here. Many beginners believe they need more money to make meaningful progress, but in reality, having less money can actually be a huge advantage because it forces you to be more careful, thoughtful, and disciplined. When you have limited resources, every decision carries more importance and weight. This creates stronger habits that stay with you even as your capital grows. On the other hand, people with more money often become careless quickly. They take bigger risks without proper analysis because losses feel less significant. This leads to inconsistent behavior and often poor long-term results eventually. So your $500 is not a limitation, it's actually training ground. It's your opportunity to build the mindset required for larger future investments. If you can manage small money effectively, scaling becomes much easier later. But if you mismanage small amounts, larger amounts will only amplify mistakes. That's why this stage is far more important than it initially appears. You are not just growing money, you are developing financial discipline daily. And discipline is what ultimately creates sustainable wealth over long periods. Now let's introduce another insight that might challenge your expectations further. Most people think investing success comes from finding the perfect opportunity, but experienced investors know it comes from avoiding major mistakes consistently. It's less about hitting big wins and more about protecting steady progress. Think about it like climbing a mountain rather than jumping to the top. Each careful step keeps you moving upward without unnecessary setbacks or falls. One wrong move can cost time, energy, and valuable confidence. So smart investors focus more on risk management than chasing big rewards. This mindset shift alone can dramatically improve your long-term results because consistency beats intensity when it comes to building real wealth. And wealth is not built in moments but through repeated disciplined actions. Now here comes the most powerful realization you need to understand today. Your goal is not to turn 500 into 5,000 quickly. Your goal is to build a system that makes growth repeatable and scalable, because once you have a working system, results naturally follow over time. This removes pressure and allows you to focus on process instead of outcomes. And focusing on process leads to better decisions and stronger long-term habits. So instead of asking how fast you can grow your money, ask this: how consistently can you follow a plan without being controlled by emotions? That question will define your success far more than any strategy ever could. And as you begin thinking this way, something powerful starts to change. You stop chasing results and start building a foundation for real growth. And that foundation is exactly what we will turn into action next. Now it's time to turn everything you've learned into clear, practical action. Because without execution, even the best strategies remain completely useless ideas. We're going to simplify this so you can start immediately without confusion. Step 1 is defining your goal clearly and attaching a realistic time frame. Turning 500 into 5,000 will not happen overnight or instantly. Set a timeline that allows growth while reducing unnecessary pressure on yourself. This could be 1 year, 2 years, or even longer depending on strategy. Clarity removes anxiety and gives your decisions a strong sense of direction. Step 2 is choosing a platform or method that suits your comfort level. You don't need complicated tools, just something reliable and easy to understand. Start simple rather than overwhelming yourself with too many advanced options. Complexity often leads to hesitation, and hesitation delays meaningful progress. Step 3 is allocating your 500 using the strategy discussed earlier. divided into stable, moderate, and higher risk portions for balanced growth. This creates a system where not everything depends on one single outcome. Next comes one of the most important habits you must develop early. Commit to investing consistently instead of relying on one-time decisions only. Even small additional amounts over time can significantly accelerate your results. This habit builds momentum and strengthens your overall financial discipline gradually. Now let's talk about tracking your progress without becoming emotionally reactive. Check your investments regularly, but avoid obsessing over every small movement. Daily fluctuations are normal and do not reflect long-term performance accurately. Focus on trends and patterns instead of reacting to temporary market noise. Another key step is continuously improving your knowledge and understanding. Spend time learning about markets, trends, and different types of investments. This doesn't require hours, just consistent effort and curiosity over time. Knowledge reduces fear and increases confidence in your decision-making process. Now let's address something practical that many beginners overlook completely. Always have a clear reason before entering any investment opportunity. Never invest based purely on hype, social media, or someone else's opinion. Understand what you are investing in and why it has growth potential. This habit alone can save you from many costly mistakes later. Next, define your exit strategy before you even invest your money. Know when you will take profits and when you will cut losses. This removes emotional decision-making during critical, high-pressure moments, because decisions made in calm moments are always more rational and effective. Now let's talk about reinvesting, which is where real acceleration begins. Whenever you make gains, consider putting them back into your system. This allows compounding to multiply your efforts without requiring more capital. Over time, this creates powerful growth that feels almost exponential. But remember, patience is what allows compounding to fully do its work. Interrupting the process too early limits your overall long-term potential. Now let's discuss managing risk without becoming overly cautious or fearful. Taking no risks at all often leads to little or no meaningful growth, but taking reckless risks can destroy your progress very quickly. Balance comes from making informed decisions and limiting your exposure carefully. Never risk more than you are willing to lose comfortably. This mindset protects your confidence and keeps you in the game longer. Consistency over time always beats short bursts of unpredictable performance. Now here's something simple but extremely powerful to implement immediately. Create a routine where you review and adjust your strategy weekly. This keeps you aligned with your goals and aware of changes. Small adjustments over time lead to significant improvements in results. And finally, remind yourself regularly why you started this journey. Your reason will keep you focused during moments of doubt or uncertainty, because there will be challenges, and that is completely part of growth. But with a clear system, those challenges become learning opportunities instead. Now you are no longer guessing, you are operating with intention and clarity. And in the final part, we will bring everything together powerfully. Now everything comes together, and this is where your real journey truly begins. You started with a simple question about turning 500 into 5,000, but what you gained is far more valuable than just a financial strategy. You gained a new way of thinking about money, growth, and long-term success. Because the truth is, money follows behavior more than it follows opportunity, and your behavior is something you can start shaping from this very moment. Think about how differently you now view that same $500. It's no longer small, it's now a tool filled with potential and direction, a tool that can grow, multiply, and evolve based on your decisions. Most people will never see money this way, and that's their limitation. But you are no longer thinking like most people around you. You are thinking like someone who understands the power of consistency. And consistency is what transforms ordinary beginnings into extraordinary outcomes. Now imagine where you could be if you actually apply everything learned today, not just for a few days, but consistently over weeks and months. Picture your confidence growing as your decisions become more structured and intentional. Picture your discipline strengthening with every calculated step you take forward. And most importantly, picture your money slowly beginning to work for you, because that's the ultimate shift from earning money to growing money. And once that shift happens, everything about your financial life changes. You stop relying only on effort and start benefiting from smart systems. That's when financial growth becomes sustainable instead of temporary or random. But none of this happens without one simple but powerful decision. The decision to start even when you don't feel completely ready. Because waiting for perfect conditions often leads to endless delays and excuses, and time is one of the most valuable assets you cannot recover. Every day you wait is a missed opportunity for growth and learning, so instead of waiting, take your first step with what you have. It doesn't need to be perfect, it just needs to be intentional. Start small, stay consistent, and allow your system to evolve naturally. Remember, even the most successful investors once started with uncertainty and doubt. What separated them was their willingness to act despite those feelings. They didn't have all the answers, but they were committed to learning. And that commitment eventually turned into clarity, confidence, and measurable results. You are now standing at that exact same starting point today. The difference will come from what you choose to do next. Will you apply this knowledge or simply move on without taking action? Because information alone never creates change without execution behind it. Your future results are built on the actions you take today. Not tomorrow, not someday, but right now in this moment. So take a deep breath and make a clear decision for yourself. Decide that you will treat your money with intention and respect. Decide that you will stay consistent even when progress feels slow. Decide that you will learn, adapt, and improve over time. Because growth is not about perfection, it's about persistence and discipline, and those are qualities completely within your control starting immediately. Now take your $500 and give it a clear purpose. Turn it into a system instead of letting it sit without direction. Track it, grow it, and most importantly, learn from every step. Because every experience adds value beyond just financial returns. This is not just about reaching 5,000, it's about transformation. Transformation in how you think, act, and approach opportunities in life. And once that transformation happens, your potential becomes unlimited. So don't just watch this moment pass like every other opportunity. Use it as the starting point of something meaningful and lasting. Because 1 year from now, you will either thank yourself or regret waiting. The choice is entirely yours, and the time to act is now.